double entry accounting. You need to remember that under double entry accounting, we have two sides. Left hand side is called debit side, right hand side is called the credit side. So when we record them, any double entry, when we record it, it has to be recorded on both sides, on debit side as well as credit side, and both debit and debit side should be equal. So in double entry accounting, we have two effects. One effect is on the debit side, the other effect is on the credit side. When we make double entry, both debit and credit amount should be equal. This is one of the aspects of double entry accounting. And every transaction in accounting has double effect. Every transaction in accounting has dual effect. So I cannot make an accounting entry with only one effect. It will be wrong. Whenever I will make an accounting entry, accounting transactions, I will record it in the books of accounts. It will have two effects, one debit and one credit side. Now, let's say, for example, I'm recording the investment in the business. The owner of the business has invested capital in the business, $10,000, for example. So this double entry, when the owner is going to invest money in the business, will have two effects. One debit side, the other effect on credit side. On debit side, we assume that the owner has brought cash. So when the owner has brought cash, $10,000, cash asset will increase. Cash is an asset. An asset increase on the debit side according to the rule of accounting. So asset will be recorded on debit side, cash asset on debit side, and the second effect will be on the capital. Capital will increase on the credit side. So cash debit side and capital credit side. Second double entry, we can assume that the owner or the entrepreneur, he or she has paid expenses. For example, salary expense $1,000. So the first effect will be on the debit side with the name of salary expense. The rule of accounting says that the expenses increase on debit side. So salary expense on debit side, and on the other hand, you have paid this expense by cash. So cash asset credit side, because cash has decreased, and according to rule of accounting, whenever asset decrease, they are recorded on credit side. One more transaction, let's say the owner has sold goods and has received cash $5,000. So when the owner has received cash, now the cash asset will increase on debit side, and the second effect will be on the revenue. So sales revenue will increase on the credit side. Let's say the owner has